Welcome to you all in the second video of Clear Your Concept series. In this video, we will discuss Bank Reconciliation Statement. We all know that accountants note down the detail with respect to the transaction with bank in a record which is called cash book. Similarly, in the same fashion, bank records the transaction with clients in a book which is called passbook or bank statement. Accountant frequently matches the balancing figure of the cash book with the balancing figure of the passbook, and if the two figure does not match, he detects out the reason for such mismatch. In the process, he corrects any omission or omission of entries or any kind of reason because of this the two figures are not matching. And for this purpose, he modifies the cash book also, makes some entries in the cash book also. And this total process is called bank reconciliation. Let's understand this with the help of a very simple example. On 30th September 2023, the accountant notices the balance in the cash book as rupees 2,40,000. On matching this with the bank statement, he finds following mismatching entries. A check issued for rupees 10,350 had been wrongfully entered in the cash book as rupees 10,503. The bank has credited interest of 12,600 rupees, which has not taken in the cash book. The two checks of value rupees 11,500 have not been debited from the bank account. Bank credited interest of rupees 3,000 rupees, and a check of 10,000 presented in the bank has not been credited. Lastly, the bank has debited rupees 2,000 rupees as bank charges. We have to prepare the bank reconciliation statement and have to find out the passbook balance with the help of this. For deciding the adjustment entry for any mismatching figure, I suggest to start with this table. Here, for the first mismatching entry, a check for rupees 10,350 has been recorded as rupees 10,503 in the cash book. So, by this entry, the cash book balance becomes 9497, whereas passbook balance becomes 9650. So, in order to match these two figures, we have to add rupees 153 in the balance of the cash book. So, for adjusting this mismatching figure, we have to add rupees 153 in the cash book balance in the bank reconciliation statement. In the same fashion, for the second mismatching entry, that is, bank has credited rupees 12,600 rupees directly in the bank account, the passbook balance increases by rupees 12,600 rupees and it becomes 32,600 rupees. But the cash book balance remains at rupees 20,000 rupees. So we have to add 12,600 rupees to make it tally with the passbook balance. So this will be the adjustment. So for adjusting this mismatching figure, we will add rupees 12,600 rupees to the cash book balance in the bank reconciliation statement. For the third mismatching figure, that is issuing of two checks of value 11,500 rupees, which is not debited by bank so far, the cash book balance is reduced by 11,500 rupees. So the fictitious balance reduces to the figure 9,500 rupees, whereas the fictitious balance in the passbook remains same as 20,000 rupees. So we have to add 11,500 rupees to the fictitious balance in cash book so as this can match with the passbook figure. So this will be the adjustment entry. So in the bank reconciliation statement, rupees 11,500 will be added to correct this mismatching figure. For mismatching entry number 4, bank has credited interest of 3,000 rupees. So by this, the bank balance increases to rupees 23,000, whereas the cash book balance remains 2,000 rupees. So here we are required to add rupees 3,000 rupees as adjustment figure in the cash book balance in bank reconciliation. So in the bank reconciliation statement, we will add rupees 3,000 to correct this mismatching figure. For the fifth mismatching entry, that is depositing check of worth 10,000 rupees with the bank which has not been credited in our account, our cash book balance increases by 10,000, whereas the passbook balance remains the same. So for matching the two figures of cash book and passbook, we have to reduce the cash book by 10,000 rupees. And for this, in the bank reconciliation statement, we will make a negative adjustment entry of rupees 10,000. The sixth and the last mismatching figure relates to that bank has directly debited rupees 2,000 as bank charges. As a result of this, the bank passbook balance reduced by rupees 2,000 rupees, whereas the cash book balance remained the same. So the adjustment entry will be that we will have to reduce the cash book balance by rupees 2,000. And for this, in the bank reconciliation statement, we will pass a negative entry of rupees 2,000. Finally, to arrive at the passbook balance, we add all positive figures in the bank reconciliation statement in the cash book balance and subtract all negative figures. Here, the passbook balance comes out to be rupees 2,55,253. So this will be our passbook balance. In this pattern, in this method, we can solve any bank reconciliation statement with any number of mismatching figures. I hope this will resolve your doubts. If you have liked the video, you are requested to subscribe this, watch this, share this, and make comments for further improvement of this. Thank you. Thank you very much.